Good morning. It's Jeffrey Christian of CPM Group. It's about 8:40 in the morning on Tuesday, the 23rd of January here in New York. I want to talk today about central bank gold. Central bank gold purchases and policies are very important to the gold market. It's one of the major factors driving prices higher or lower, and it's a substantial amount of gold that central banks buy and hold on an ongoing basis. And there's a lot of bad information about it. Central banks used to be much more secretive about their gold holdings and their gold sales and purchases than they are today. There's been a great increase in transparency on the part of central banks over the last 20 or 30 years, really starting in the 80s. This is a list of central banks that bought gold in 2023. And it goes through November. That's the most recent reporting period that we have for them. China has reported December, and they bought another 290,000 or 290,000 ounces of gold in December. So their purchases are about 7.3 million ounces for the full year, as opposed to the 6.9 here. Sorry about the small type, but there are, as you can see, more than a dozen central banks that were buying gold last year. The preponderance of the purchases were China. Through November, there were 17 million ounces of gold that had been bought by central banks on a gross basis. Of that 17 million ounces, China had bought almost 7 million ounces of it. So they represent the bulk of the purchases. But you can see a wide range of other central banks buying gold over the course of the year. Central banks continue to want to add gold to their reserves. They see, for most central banks, with the possibly sole exception of Russia, see gold as something that could be a significant but small part of their monetary reserves. And I'll show you a couple charts toward the end of this video related to that. They don't see gold as resuming tied to currencies. No central bank that I know of is talking about returning to a gold standard. Not even the Central Bank of Russia is talking about that. Vladimir Putin is talking about it, but the Central Bank of Russia, the other central banks in the BRICS group, Brazil, India, China, and South Africa, are not talking about that. Other central banks are not talking about any role for gold in the currency system. They specifically focus on gold as being part of their monetary reserves, and for the most part, a relatively small part of their monetary reserves, but a significant part. When I mentioned significant but small part, that's not the exact words that the People's Bank of China used in 2014, 2015, when they made an announcement of changing their attitudes toward gold at the People's Bank of China level. To say that, yes, they had been adding gold to their reserves, and they would continue to, because they saw it as a significant but small part of their reserves. China, Russia, and many other countries buy gold from domestic refineries, of domestic refined production, from mines, and from scrap. They will sometimes buy in the international market, but those countries that do produce gold, China, Russia, the Philippines, Kazakhstan, Uzbekistan, who tend to buy from domestic refiners, domestic production. So through November, it was about 17 million ounces on a gross basis. We know that will rise by at least 290,000 ounces when we get the December data, which should be within the next couple weeks. These are the central banks that sold gold in 2023 and the net balance. You can see about 4.8 million ounces of gold that was sold. primarily by Turkey, Kazakhstan, and Uzbekistan, primarily in the first quarter. And when I talk about what's going to happen or what we expect to happen in 2024, one of the significant things is we think that you'll see a significant reduction in the amount of gross gold sales by central banks. Turkey, Kazakhstan, and Uzbekistan all ran into foreign exchange shortages to pay for imports in the first quarter or so of 2023. And they sold gold in order to raise currencies to pay for their net imports during that period of time. We explained it back in the day, earlier in 2023 in videos when it happened. We don't expect that to recur in 2024. So we're looking for lower gross sales in 2024. We're also looking for lower gross purchases too, which I'll get to in a second. You take this 4.8 and the 17 million ounces of gross purchases through November, and you come up with about 12.2 million ounces of net additions to total central bank gold holdings through November. It'll be about 13.1, we think, when we have December data added. And this is the annual reported central bank gold changes through November of this year. And you can see back through about 2008, 2010, you had the residual of larger sales by developed country central banks. These are countries that had used gold for international trade and capital settlements prior to 1971. And they had built up a lot of gold in their reserves. They had 80, 90, 95, 97% of their monetary reserves in gold. So from the late 1970s into 2008, 2010, they were disposing of some of that to rebalance their monetary reserve portfolio to have more currencies, primarily the US dollar, and less gold. At the same time, there were emerging economies that were building up massive reserves of currencies, primarily US dollars. China, South Korea, Taiwan, Japan, the Philippines, Thailand, primarily. And they had 90% of their monetary reserves in US dollars. So they, when the opportunities presented it to them, started buying gold. And so you can see the red net gross sales started to dissipate. We were ending the period of time when those central banks that wanted to sell some of their gold reserves had sold those reserves. And that was becoming, that policy was coming to an end. And I should say, a lot of those central banks did not sell all their gold. A couple did, but for the most part, Britain, Switzerland, and several other European countries sold half of the gold that they had, taking their gold reserves down to about 50% of their monetary reserves or less. You also had a big growth in their currency reserves too. The central banks that were doing the gross purchases were adding gold to their reserves, selling dollars from gold. And for the most part, with the exception of Russia and a couple other countries that had sanctions leveled against them, they were looking to have 2 to 10% of their monetary reserves in gold. And that picked up steam around 2008, 2009, after the gold price had risen from $250 to $1,000, and has persisted during most of the ensuing 15, 16 years when gold prices have averaged above $1,200. So developing or emerging economies central banks have been net buyers since around 2008 of larger volumes. You can see 2022 did not see 20 million ounces. That was a mistake that somebody else made in their guesswork about how much central banks are buying. And I don't know that they've changed that policy. Our view was there was about 10.2 million ounces of net purchases in 2022, up from 10.1 in 2021. And last year, it probably will be about 13 million ounces. Our expectation is that it will come down. These are net additions, and this goes back further. So you can see this chart goes back to the year 2000. This chart goes back to 1950. You can see the period of large acquisitions of gold during which was the Bretton Woods system, when gold was being used to settle international trade and capital flows. So you'd have a lot of dollars. You'd go to the U.S. Treasury. You'd say, I have dollars. Give me gold. Price of gold is fixed at $35 an ounce. And after World War II, a lot of central banks didn't have a lot of gold. The United States had a tremendous amount of gold. And what we saw was really starting from 1947 or so, central banks rebuilding their gold positions. That ended around 1967. And you saw a period of time with large sales from central banks. And that represented people coming to the U.S. Treasury saying, hey, you think that the dollar is fixed at $35 an ounce. Here's my dollars. Give me your gold. The U.S. government Treasury ended that policy in April of 1968. You had a period of demonetization of gold when those central banks were selling, and then you flipped over to a period where other central banks from emerging economies were buying. About 13 million ounces, we think, last year. Our expectation is that this year, 2024, we'll probably see net purchases around 9 million ounces. As I said, we expect lower sales. We don't think that Turkey, Uzbekistan, and Kazakhstan are going to get into the foreign currency crunch that they got into in the first quarter of 2023. So we think that gross sales will be much smaller, but we also think that gross purchases will be much smaller. And that's because while central banks still want to buy gold and add it to their reserves, and they still are interested in doing it, they remain price sensitive. They're less price sensitive about the price of gold than they used to be, but they're more price sensitive than private investors. And our expectation is that private investors are going to want to buy several million ounces of gold more in 2024 than they did in 2023. And they will bid the price of gold up, and central banks will say, look, I might have been a buyer at $1,800 in 2020, 2021, and I may have been a buyer at $1,950 or $2,000 in 2023, but I am going to pull back and wait to see if the gold price comes off before we buy. So we think that the price sensitivity or elasticity of central banks greater than the price elasticity or sensitivity of private investors will cause central banks to buy less gold this year than they did last year, and that at the end of the day, our best guess right now is that maybe around 9 million ounces of central bank purchases in 2024. That's all I have for now. We will be having our open forum for our clients next week. It's an online Q&A. If you are a client, you can register to participate at cpmgroup.com or send a note to info@cpmgroup.com. If you want to be a client, you can reach out to us either through our website, cpmgroup.com, or through an email at info@cpmgroup.com. and get on the roster. If you have questions, you can send them in ahead of time, or you can ask them at the Zoom on February 3rd. We'll be doing our Silver Facts and Fantasy webinar on February 28th, and then we will have our silver reception at the PDAC on the 3rd of March. Gold, Silver, Platinum yearbooks will be coming out later. And we are in the process of starting to organize a silver seminar for later this year. That's all I have. Again, You can visit our website at cpmgroup.com. You can buy our yearbooks. The gold yearbook for 2023 has a lot more explanation and details and statistics about central bank gold purchases, if that topic interests you, as well as information about every other aspect about the gold market. Take care of yourself. Take care of those around you. Let's see what we can do to make the world a little bit better over the next week. I'll speak to you later.